when they said they wanted me to come and talk to the marketing conference, I thought, how can I be relevant? As Mike mentioned, I present to high net worth and their advisors all day, every day. And I thought what I would do is take the presentation that I give all across the country and present that, but wrap it on the front end and the back end with how it applies to the systems I employ for marketing. So I hope that this is, a pretty good way for us to peel back the layers of how to work with high net worth individuals. All right, the other thing that I'm going to point out are three, I'm going to call them secrets, but really three things that have changed my business. And right at the end, I'll show you a little sneak peek into the one thing that absolutely exploded my business. So when you're selling to the high net worth market, you have to really think differently. I've spent the weekend here watching all the great presentations on, guerrilla marketing and internet marketing, and it's all about, clicks per thousand, cost per click, big volume. Here's the number one secret I'm going to share about the high net worth. It's a numbers game, and that number is 1. Because every single person that we interact with could make or break an extremely high-ticket sale. So we do think a little bit differently. It is 100% relationship-driven. So we are trying to, drill very, very deep and not very, very wide. So right now, our funnel, and if you're in the internet marketing world, you might laugh, is probably less than 500 people. So I am farming a group of 500 people or less. So that one little secret I told you that exploded my business, I'm going to show you at the end. I'm going to show you how high touch you need to be when you get to this level of marketing to these high net worth individuals. So the first tip I'm going to give you is you need to pick a niche. In my particular case, my entire career, 27 years in the finance industry, I focused on taxes. I just found that the best way to get in with my particular target avatar is to open the door with some tax saving strategies, okay? You want to become the expert. You have to have some level of expertise. I listen to a lot of podcasts and things, and people always say, be good at what you do, but you really do have to be good at what you do. You have to become an expert. I've seen so many people in our circle present, and 3 years ago, they were talking about student housing. 2 years ago, they were talking about multifamily. Last year, the same people were talking about cannabis and blockchain and Bitcoin. This year, it's all about stem cells. Well, if you're in front of these super high net worth prospects and you're changing your stripes every time you talk to them, you're not going to resonate with them, okay? You absolutely need to become the expert to get the credibility. And then you need to learn to attract those people to you, and that's what I'm going to talk about here in a couple minutes. I don't know if you've seen this video, but I always like to start my presentations to frame the conversation the right way. Anyone in the room ever play Monopoly? Yeah. Right? Yeah, so we have a lot of people who play Monopoly. So 2 things about Monopoly. No one ever won Monopoly collecting $200 from Pass and Go, right? You've got to do something else. You've got to take some type of risk, all right? And the second thing that you might not know is taxes are a real bitch.
Ben, where's all your money gone, Daddy?
Taxes. 6, 9, 10, 11. Let me fix my houses.
Bug, it's okay. It's part of the game.
No, it's not.
It
It's not fun.
It's not fun to what?
It's the worst part of the game.
Oh, it's what?
Taxes.
So that's going viral on the internet right now, but I thought it was cute and a good way to start. So that's kind of like how I wanted to frame what I do. Now let me just show you exactly what I do when I had 300 people in the room on Tuesday in Dallas. We had 450 in New York City a couple of weeks ago. We'll be in Miami with at least 12 billionaire families in the room. So True North Resources. Who is True North Resources? We have strategies to save on current year taxes and also to convert your IRAs into tax-free Roth IRAs by reducing your effective rate to do that to single digits. Now, how does that actually work? We had a client come to us, and their CPA advised them to convert all of their retirement accounts to Roth because I think we can all agree taxes are going higher, the government's spending like there's no tomorrow, and this particular person had a report that showed they were going to owe $395,000 to convert their IRAs and 401ks into a Roth. I'm teasing you a little bit here, but at the end of the presentation, I'm going to show you how we were able to do that exact same thing for $54,000. Now, we're not selling anything here. We're not offering any funds, but when we do, they are Reg D funds, and they're offered only to accredited investors. So True North is a real estate developer, but we're way different than your typical developer because we offer a tax savings option. Just like everyone else, we're going to look at a property and try and determine its highest and best use. What should we do with that property? Like I said before, student housing, assisted living, should we do a solar farm? Can we mine it? That's the first step in any real estate development. The second thing we're going to do is run the math and say, what happens if we just land bank this and just hold it and flip it 3, 5, 7 years from now? But the third thing we do that's different, we use our in-depth knowledge of the tax code to calculate the benefits to our investors of placing a land conservation easement on that land. And since that's the option that most of our investors are interested in, I'm going to spend the next couple minutes talking about that. But I need you to keep a couple things in mind. It's our experience with the tax code that allows us to offer this option because it's very sophisticated. The benefits of the land conservation easement deduction to our clients relies heavily on that highest and best use because it's the source of our deduction. So I'm going to show you 2 quick case studies that hopefully will bring this home. So how does it work? True North buys the property from the owner, and then we underwrite those 3 investment strategies, and we decide. The program we've opened now, are we going to go into the solar business? Alternative energy is very, very hot right now. Are we going to go into the land speculation business and buy and hold that land for 5 or 7 years? Or are we going to get a leveraged tax deduction by putting a land conservation easement on that property? And like I said, most people are interested in that land conservation easement option. So let me quickly tell you how that works if you don't know. It's real simple. It's an agreement between the landowners and a land trust that that land in perpetuity will never be developed. So it's very important that we catch this. We'll only develop properties that we suspect have conservation values. What does that mean? There's something on the property worth preserving. There's a tree, a fish, an owl, a salamander. You know, the one that we just closed last week has bald eagle habitat on it. So very, very conservation rich. So we establish that it has the conservation values. That's what's going to help us qualify for a tax deduction, which is what we're talking about. Now, why would somebody vote for the conservation? Like I just said, you'll get an extremely large tax deduction because it's not based on the value of the land. And I'll bring this home in the next slide. The deduction is based on the sacrificed entrepreneurial profit for not doing the thing that we just said we were going to do, highest and best use. We're not going to develop. We've given up so much money for not developing. Therefore, we get a tax deduction based on that. It can take up to 50% of your adjusted gross income. You could drop your income in half on your tax return through this type of deduction. And it's because you're able to take all of the profit for the entire program and take it as a deduction this year. It's very powerful. I'm going to show you 2 case studies. Now, what makes this possible? Congress. Government has incentivized the taxpayer to put land into conservation. It's been very successful. Over 44 million acres have been placed into conservation through this section of the tax code. Why would they do it? Well, it's simple. They want to make sure the pristine lands and open vistas don't turn into overpopulated areas. They don't want Chinese restaurants in Central Park, right? That is a conservation easement. It will be like that forever. So here's how it works. We buy a piece of land, and we go through this exercise called highest and best use. We do market studies and say, what can we do here? In the project that we're looking at right now, we had a development team go in. We're going to do senior housing. They went in, they ran the numbers, they looked at everything from the geotech reports to availability of water, sewer, everything else, and they actually determined that it wasn't very profitable to develop that land. Now, it's in an area of the country where they're mining granite, And we have experience doing that. So we sent the crew in and they drilled the test holes. Guess what? It wasn't worth mining either. And while we were mining the granite, the utility company from about 15 miles away drove by and said, you know what? You guys are on the KW, the high power lines. This is a perfect spot to do a solar farm. So we actually landed that highest and best use for this particular project was a solar farm. Now, our investors are going to have the option to vote. Are we going to develop that solar farm, or do we want a tax deduction? But the tax deduction is based on, the non-cash charitable deduction is based on what we could have made if we developed it. That's like the number one point I need you all to get. And it's just like any other donation you would make. Like I use the example of donating your boat. They're both going to require an appraisal, and they're both going to require Form 8283 be attached to your tax return. However, say you have that boat that you're trying to sell, and you just can't get any takers at what you think it's worth. And finally, like I drive every day to work, I drive by a billboard that says, Boat Angel, donate your boat. Well, there's an easy way to get rid of a boat. But if the appraisal comes in at $100,000, when you donate your boat, you get a deduction on Schedule A for $100,000. In the land conservation easement, in the last program we had that closed, for every $100,000 that was put into the program, because we're getting a deduction based on profits that we're giving up, we were able to pass in a $450,000 deduction to our investors. So let me show you how that math is going to work in a second. Again, it's $1 for dollar on your boat, 450 to 1 in one of our programs, because the government's valuing that sacrificed profit, not the cost basis. So in that particular project, our total development budget was $5 million. The potential net profit that was calculated from the appraisal company was $22.5 million. So think about it. If an investor came in, one of these family offices came in and invested $5 million, and then they were able to get a $22 million deduction at the highest tax bracket right now, 37%, that's $8.3 million of tax refund. Now, how does that work for an individual? An individual comes into the program, say they have $900,000 of what's called adjusted gross income. That's your income after your accountant's done all your work, you've done all your depreciation and your rental and everything else that comes in. So you land at $900,000. The law allows us to take half of that as a deduction. That's $450,000. Our ratio happens to be 4.5. So for easy math, you're going to put in $100,000 and get a $450,000 deduction. What does that mean for you? Well, if you make $900,000 in 2019, you owe the federal government $262,000 in taxes. If you can drop that to $450,000, you owe the government only $99,000 in taxes. So we're able to drop your taxes by $162,000. Now, you have to put $100,000 into the program, and you're investing into this project, but that still leaves a $62,000 net return, I'm putting return in quotes, in your pocket. That's on the federal level. Now, if you happen to be in one of the 31 states that charges income tax and allows for a charitable deduction, you have another layer of taxes that we can help you save for the exact same investment. So that investor, and I just took the average of the top 5 taxable states, instead of $325,000 in taxes, they're going to owe $144,000. Same $100,000 investment, they keep $110,000 in their pocket. Now you can see if you're working with and have these type of adjusted gross incomes, this is a very, very powerful strategy. But it really only works for people in the highest tax brackets. And what does that mean? As your income goes higher, the percent the government takes goes up. Not from $1, but if you're married filing joint and you make over $612,000, the very next dollar is taxed at 37 cents. 35%, 32, those are the percentages where this makes mathematical sense to look at. Now here I want to talk just for a minute about a strategy, okay? This is different than the tactic of a land conservation easement. This is a strategy because we have a lot of people come to us and they are frightfully worried about taxes today and taxes tomorrow. So in 1972, when ERISA passed, which is the Retirement Savings Act, and you could put money into an IRA, and then later this thing called a 401k came out, you put $1 in and you don't have to pay your taxes. The top tax bracket was 70%. So you're putting in $1 instead of paying the government $70, made perfect sense. Well, today that top tax bracket is 37 cents. So we're coming from the premise that A, taxes are going up, and B, this might be a good time to pull money out of those accounts and convert it to a Roth, which will never be taxed, okay? A Roth IRA is similar to your regular, but when you take $1,000 out of your traditional, you owe tax on it. With the Roth, you don't owe anything, but you have to pay the tax up front. So how do we convert money from traditional to Roth? Well, it's a taxable event. No one wants to do that. So we had a client come to us, $600,000 of adjusted gross income. That's what they made every year before their deductions. And they happened to be married, filing joint in Arkansas, and they owed state and federal taxes of $191,000. They had $900,000 in their IRA, and their CPA said, you gotta get out of this thing. It's gonna kill you later in life. It's gonna cost them $395,000. They don't wanna write the check. It's a lot of money. So here's our strategy. The mandate is convert the IRA to Roth for less than $395,000. The first strategy we use is what's called the discounting mechanism. We're gonna convert it over 2 years because of how the taxes work, that's beneficial. And then we're gonna move the Roth over and pay the tax with the land conservation easement. So watch how this works. We're able to take all of that $395,000 of expected taxes that were due, and we're able to do it over 2 years for $54,000, saving this client $340,000. Here's how it worked. When you're in the IRA world, you can do something called the self-directed IRA. So anyone who's ever bought in gold bars or an apartment building or fix and flip rental or any type of non-Wall Street asset, you already have what's called the self-directed IRA, okay? So the strategy is you take the IRA, put it into a self-directed IRA, which is a non-taxable event. I know we're getting technical. But then you put it into, for instance, a real estate project, all right? So you put it into an apartment complex that's being built, and during the process of that project, the custodian, the person holding the IRA that the IRS communicates to, they're gonna reach out and say, hey, the IRS once a year wants to know what this thing is worth. Can you send in an appraisal? Well, between investing and people living in those apartments, there's a lot of activity going on. And along the way, it's actually worth less on paper because money's been spent. I have here, architects, surveyors, engineers, and when the appraiser comes in, he's not gonna give us any value for that. So what happens? The appraisal comes out and doesn't value those soft costs, and the appraisal comes back at 60 cents on the dollar. Well, we just put in 100,000, let's say, for example, in this case, 900,000. Now on paper, it looks like the account's only worth $540,000. Perfectly legitimate. That's exactly what the IRS wants us to do. But boy, isn't that a good time to convert if we're gonna pay taxes. So that's when we wanna take and move. Another way to think about it is you have 1,000 shares of Tesla stock, and the thing tanks, and you have in your mind you wanna convert, well, do it then. Because you're gonna hold it anyway, you may as well do it. So I need you to keep that $540,000 in mind, because we're gonna do half now and half in January. So we convert it to a Roth, and that's our first discount. Now I know it gets pretty technical here, but at the end of the day, we had someone with $600,000 of income. We actually added $270,000, right? We converted half of their IRA to Roth, and we actually were able to then take half of that away with the land conservation easement. So this is the trickiest part of all of it, but at the end of the day, we created income through the conversion, but then we lowered it through the first strategy called the land conservation easement. So before they met us, they owed $191,000 in taxes. After we did those two strategies, they owed $218,000. That's a difference of $27,000. But what was the net effect? They were able to move their retirement accounts to a Roth account, and it only cost them $27,000 to do it. So instead of paying the normal tax and then convert the Roth and owe that $395,000, we're able to do it for $27,000. It took us 2 years, is the plan, and that's gonna be the total of $54,000. So what's the 218? Again, they have to put $97,000 into the land conservation easement. They still owe federal and state tax because we can only lower it by half, and that's where the 218 comes from. But think about it. If you're sitting there thinking, I want to convert some IRA to Roth, and your CPA tells you it's going to cost $395,000, that's just you'd have to mortgage your house. In this particular instance, we're able to pay it over 2 years, and the second payment for the taxes isn't due until April 15th of 2021, which happens to be a Wednesday, in case you're wondering. So that's how we do it. So in summary, folks, our real estate programs offer the conservation easement option. That gives you a discount. Our members vote, and if the conservation easement option is selected, you're gonna get your tax deduction. And the land conservation easement option coupled with the Roth conversion is a very powerful strategy. So that's kind of my tagline, strategies, not tactics. We're putting, common things you might read about, but we're putting them together in very unique ways to come up with these solutions. All right, folks, 12 minutes, 14 minutes? So that's the presentation when we're talking to high net worth in the room, and we get very specific with the case study that we take through two things. And we work pretty exclusively with other financial advisors and these family offices that are working with a particular investor. That's the difference. Family office means they just have one family that made a lot of money, and they've got their own team. Financial advisor means they've got 20, 50, 100, 200 clients.
David?
Yeah, you have a question?
Can you wrap it up so we can do the Q&A?
Oh, okay. All right, let me get through it. Right. So let me show you just two more points I want to make. Okay. All right. So here's what I want to talk about working with high net worth individuals. We work with business owners, physicians, people like that. I always say 5 time zones, but it's really 4 time zones, but it's 5 hours. And the people we work with are working 24-hour cycles, so we're always trying to get in touch with people. So I have on here that you want to deal with these people on their own terms, right? You want to figure out how to communicate with them. I told you we go very deep with each individual person. And I had Max, my tech guy, put together a quick reel of what we do day in and day out. We get a prospect, we analyze their situation, and then in the very beginning, we would chase them for weeks. You'd get an appointment, you'd text them, they'd confirm back, you'd call, you'd get voicemail, and then an hour later, they'd text back and say, somebody came in with a broken foot, I had to go into surgery, right? So we just can never get these people. So now what we've done is we built a studio in our office. We do podcasts, and we do other types of, general webinars. And when I get on the phone with someone about 5 times last week, I'll say who I am, they refer to me, and they'll say, oh, I just watched your webinar. They say, you're famous. I just watched your whole presentation on the computer. Then once we analyze their situation, this is where our business just exploded. Instead of chasing them, I'll actually do a 3 to 5 minute video in the studio with their information through a Zoom call that we record, and I'll text them the link. And I'll say in the text, Doc, take a look at this. I threw this together. I know you're busy, but as soon as you get a chance to watch it, hit me back. And this is what that looks like.
This is David Babinski with True North Resources. Good afternoon, Doctor. It's David Babinski with True North. Good afternoon, David. Good afternoon, Joe. Good afternoon, Doctor. Good afternoon, Andrew. Good morning, Danielle. Good afternoon, David.
So that was just from last week. We probably do 6 to 9 videos every day or two where we're actually going through their spreadsheets, their numbers, their analysis. And that was the difference for us, where we were able to have our business explode because we stopped playing phone tag. We just gave them the information, we pushed it to them, and at their leisure, they were able to watch it. And boy, the feedback I get is, I never would have understood that if you put it in an email. Thanks for the video. And it was 3 minutes. 3 minutes. So when you're working with the high end like that, that's what it is. So to wrap it up, pick a niche. We pick taxes. Become the expert. One of the things this guy's helped me do is publish my book, hopefully by next month. We have a huge event in Miami. And you have to learn how to communicate with these people on their own terms. So we're going to have a little panel.
Yeah, we're going to do just a little question and answer period, because having worked with him as a book creator, I realized that he's got a bunch of powerful stuff. You heard how he saves taxes for people that make $1 million a year, but he's going to tell you how the Roth conversions will help you no matter what level of income you have. And the way it's doing it, just my way of looking at it, is he shows you how to kick the government out as a 50 or more % partner in your retirement plans. Because that's what you guys, you make that little deduction and you're like, oh, I saved on taxes. Yeah, well, that thing doubles, triples, quadruples. Guess who's got their hand out when you get ready to use that money? David, you want to
Yeah, sure. So think about it. If you're making an IRA contribution, you can deduct $6,000. So at 37%, whatever the math is there, you're saving $2,000. But as that 6 grows, 6 turns into 12, 12 turns into 24, 24 turns into 48. Now it's time to retire. You owe a tax on the whole 48,000. You saved, a pittance on the 6,000, but now you owe the tax on the whole thing. So somewhere along that cycle, you've got to cut the cord And this Roth IRA is it's the eighth wonder of the world. I mean, I kind of took the assumption that everyone knew what the Roth was, but it means that you put money in and don't get that little deduction, but then you never pay tax on it again. It doubles, triples, quadruples, and that's the strategy. And the law just changed that no matter what your income is, you can convert current assets to a Roth. You usually couldn't do that. A lot of my conversations with physicians and people I deal with, oh, my CPA said I make too much to convert. I make too much for a Roth, just in general. Well, you can convert. You don't have to make the new contribution with fresh money. Yes, you make too much for that, but the $1 million you have in your 401k, we could start to chip away at that. And that's where these complicated strategies come from.
Okay, and they promised they would tell how they do their follow-up so well, how they get people to write checks for $100,000 or $500,000 or whatever. Would anybody like to hear about their follow-up system? Yeah, me too. That's why I'm up here. Do you want to start, Max, since you...
Well,
you
my
got the
secret weapon, I
studios
showed you
together?
the videos. This is the guy who put my studio together and, puts the, every day we write the board and before we leave, this is what's happening today. And sometimes you just have to do that, right? We have to do the work.
Yeah, so for the astute members of the audience here, we'll notice that a third body has snuck up here. My name is Maxwell Babinski. I'm actually David's son. So very privileged to be in the position that I am in, working with him day in and day out, as he said. Specifically follow-up, as he mentioned. You saw the short clip of the videos. Good morning, good afternoon, doctor. That is a very small percentage of the things we have in our queue. That video could have been 30 minutes long. So we're really trying to get effective follow-up to people that will really register as, what's the word here? We're not, shotgunning out,
Right.
follow-up emails, right?
Right.
Like we're just putting in their name for the headline and then the body is the same. It's a very personalized response that a lot of times these people are seeing, we hang up on the phone, they give us their numbers, we do the spreadsheet, record a video, we'll speak to them at the office, they'll drive home, they'll get home, they'll have that video. They'll have that information. It just adds so much more credibility than what we're seeing in the marketplace that we're in. It's just been really effective for us.
Business has exploded. I mean,
Exactly.
It really is. It's that one little differentiator. And so many times I've heard, I try to explain it to my spouse. Can we set another call? Now I hear, oh, we just watched the video when I got home. And who do we send the check? It moves the cycle along much, much faster. So yeah, we're not talking about these, massive, large numbers. We're shotgunning. Once we get a lead, that lead is so valuable that we will make a custom video, and there's nothing that's, there's no doubt that it is not a cookie cutter template. Like, this is their numbers, their name, their spreadsheet. I explain it in a very practical way of what the benefits are, what the next steps are, and Max is right, though. I mean, I don't know if there's been more than 1 or 2 days in the last quarter where we've left and someone didn't get a video the same day we talked to them. And it's just so powerful because service right now in the industry is just horrible. And to actually give someone that kind of white glove service, it's just incredible the response we're getting. Where have you been my whole life? I hear a lot. And remember, I already get the phone call and they say, oh, you're famous. I just watched your webinar. And now I do that for them and they see the studio and exactly how the webinar looked. It's just been so powerful. And I think that's why Mike and Jason wanted us to talk a little bit.
Well, True North is actually closing about $200 million worth of deals in the last quarter of the year. Because everybody wants it before the year-end taxes and that. So this is their busy season. It was really hard to drag him in here because he's busy taking all those checks. And don't you wish you had that problem?
Well, we only take wires, so that makes it a little
yeah.
Yeah. We haven't seen a check in years.
He also paid for his book by wire, which, by the way, is way better than that 3% to PayPal. So if you don't know how to do that, that's one more thing to add into your client onboarding is teach them to send you the money without you having to let somebody else get a cut of it on the way through. And the other thing that David does is he goes where his clients are. You want to talk a little bit about the deal you did with family offices? You don't have to go into specifics, but how
Yeah,
you got
so
in front of all these billionaires.
The whole point I mentioned at the end about white labeling and working with other folks is I don't care what you do, you need to find someone who has your prospect. When I first got into the financial industry and I was dealing with, high net worth people, the first thing I did is went down to my local Cadillac dealer and said, can we split some marketing costs? I had shoe leather, I didn't have any money. So I said, give me your list, and I'll handwrite letters to every one of them, and we'll have a reception in your lobby, and it just snowballed. So I always had in the back of my mind, where are my customers? Well, there's this group called the Family Office Club. There's 21 bona fide billionaires that go to these meetings throughout the year. So I went to Richard, who's the gentleman who runs it, and I said, how do I get on stage for 15 minutes every time you're in a room? And he said, well, you have to show up, and it's an arduous time. Well, what is it, November? In no particular order, since June, Dallas, San Francisco, LA, New York, Chicago, back to Dallas, Miami, New York again, back to Dallas again, and I don't even know what day it is, but we just got back from somewhere. We were in Nashville, and then we flew from Nashville to New York. Why? Because this is what we're doing. To meet. Oh, and by the way, we're in Miami, and there's, it's coming to an end, and Maxwell was with me shooting the video so we could post it on the website so I could be the expert, right? Here I am giving a talk in front of all these people in Miami. And he said, oh, someone wanted to talk to you, and they're at the elevator. He grabs them. They're selling their business for $100 million and just wanted to say hello before they left. And I never would have met that person if I didn't have 15 minutes in front of the room to establish myself as an expert. So you just have to think a little bit outside the box. Who has the prospects that you want? And you can roll forward. Who's got your list? Who's got, you could.
Yeah, exactly. And I wanted to mention to everyone that one of the products that Jason's just about to launch, you've seen the Guerrilla talks where people get up here and they get their 15 minutes of fame and all that. Well, we're shooting videos that they're going to create a sizzle reel for. And you saw when Bernie spoke, that introductory thing, that's a sizzle reel. And you never want to let someone else introduce you because I might blotch it like I did with David. So he should have had a sizzle reel. Well, we're filming for a sizzle reel right now. But Guerrilla Marketing's going to be able to put you on the stage, professional video. We'll be bringing in a professional photographer to give you good shots, good action shots out in the lobby and stuff, the kind of thing you need to make people know that you're a rock star. And then once you have those two things, we have 3 levels of books that Jason wants to let you guys know about. We have the book for the people that are just getting started that you saw out on the table, the Thought Leaders book. And what that's for is to make you a best-selling author. But more than that, it shows that you hang out with a lot of other top people. So it's guilt by association, if you will. If you want people to think you're an expert, if every time they see you, you're with experts, that's a clue. They'll figure that out. The next step is a single author book, which is what we're creating for David right now, where you have a topic, you want to be the expert in that niche or that topic, so we create a book like that. And then the third, the high tier one that all of us want to do when we grow up, is a Guerrilla Marketing co-author book. And that's the top of the line. You're tying yourself into a brand that's sold over 20 million books. And the millennials may not know the brand that well yet, but they're going to. But I can tell you the people with all the money, the over 45 and up crowd, they know what Guerrilla Marketing is. And I don't think there's a more powerful tool than a Guerrilla Marketing branded co-author book. You're going to see one from me soon, I promise you that, but I'm already in the Guerrilla Marketing Thought Leader group book, so it's I do drink my own Kool-Aid, I guess. But are there any other questions for David or Alex on how they follow up with high-end clients? Or do you have $100 million you need him to help you with? Yeah, either one. Okay, well, thank you so much for the time, folks.
Bye, guys.